Welcome back to the Eric Krown crypto channel. Wishing you a happy and healthy start to this nice, gloomy, actually Thursday morning over here from Helsinki, Finland. Many things to be speaking about today. I want to follow up on yesterday's short-term time frame analysis. We got that violent price action with a wick up to $40,000, and what that sort of looks like for the next few days to come as we put the next macro event in sights, which of course is the CPI print on, I believe, the 11th, so next week of this month. Anyways, with that in mind, plenty to talk about today, so I will waste no more time. I do want to let you know that the trading journal features have been enhanced on the Krown Trading application. All you need to do is check it out in the link in the description below. It is also free, and you can actually sort all of your journals around now too, and compare your different strategies amongst each other, which is essentially what I'm doing. And we've also added more functionality on the panes over here, giving you more insight into how your strategies are working. There's going to be a lot more coming in the not so distant future, which I'm very happy about. But until then, let's just dive in to perhaps I kind of want to start this off in a bit of a different way, because I feel like everyone's super bullish right now. And yes, I do think that there is good reason to believe that Bitcoin might even test that $41,500 region that we spoke about yesterday. However, there is a potential trap situation going on right here. It is unconfirmed. It is just a potential, but I want to go over the major confirming factor for this being a trap. And if it does happen, I would be looking at targets back down around essentially our lows of the week, probably continuation from there as well. And it is quite simply this: yesterday's breakout region right here at 39,150. As long as Bitcoin is above there, I do look at this again as more likely to float up into the right. But below there, I would confirm, well, a trap in this case, the good old trap, right? Why is that? We have several things that do give it a potential. One of them being the potential hidden bearish divergence that Bitcoin will have going back to the highs that we saw from the 28th and even the 26th of April. So that was when Bitcoin was trading, a good $1,000 higher than where we're currently at right now. And then on top of that, we would see, if Bitcoin were to close below that 39,150-ish region, even on a 4-hour time frame, we would see daily, very likely, assuming the daily falls through with it as well, daily stochastic momentum would turn back onto the downside with any sort of a closure today below 39,150. To top that off, we do also notice over here on the app that, yes, the funding rates are nice and positive right now on both the daily and the hourly. Of course, that doesn't just blindly mean that things are going to come down here. Obviously, generally speaking, it's generally going to be positive. But within the context of that current setup, if Bitcoin were to come down and close specifically below 39,150, then yes, this would be a concerning factor, as well as, likely there's going to be a lot of longs that are either forced out of their positions or going to or are going to take it, or just going to take it off, I'd imagine, as that is going to be dead money right there. Anyways, until then, I do want to once again reiterate my stance that, based off of yesterday's analysis, I think that Bitcoin could very easily trade up and to the right from here after a bit of a sideways consolidation. The target or the area of interest upside would still be kind of about the same thing as yesterday, that 382 Fibonacci retracement at about 41,500. That also has several confluences with a few other things, and I want to be also very deliberately clear here that that this has not really changed anything on the higher term timeframes. In fact, that would be directly in line with the white 20 simple on the monthly, of which this is one of the charts that still makes me very much lean towards the downside long term. Now, long term obviously means long term, over the next few months, not today, not tomorrow, although, coming back down below 39 especially would be rather concerning and very likely does imply moves back down to the mid to low 30,000s. Anyways, in this case right here, I don't think I need to go fully over this chart yet again, but I'll just point out monthly MACD crossing the downside, represented by these green vertical bars right here, plus losing the PMAR, but we don't need to necessarily focus on that right now. Plus, most importantly, or the last thing that is necessary to make this setup viable, historically speaking, is closing below that white 20 symbol, which we've seen 1, 2, 3 times in Bitcoin's history. We're seeing the 4th time right here, obviously. And each and every time that we have seen it in the past, over the next 4 to 6 months, let's say, Bitcoin has come down to that green moving average, a 55 exponential, and found its lows. So that's the icing on the cake. Doesn't mean it's always going to work like that, but we do have some pretty good historical results of this. And for right now, that is basically about $25,000. So I still think that is relevant, especially as long as Bitcoin is below that white 20 simple, as you see right here. That is when price action really started to accelerate to the downside, like you see right here, in 2020. It did kind of happen all in the same drive, to be fair. But in this case, guess where the 20 simple is? 41,500. So that would be a great sort of rally up to, if Bitcoin were to continue, to get everyone on the wrong side and then slim it back down the other way, of course. I remain with my overall position that Bitcoin has more downside risk, or statistically speaking, has more downside risk, specifically as long as Bitcoin is below about $44,000. Why is that? That is due to the 5-day chart over here, of which we got another 5-day closure for CME, not for spot price action. That's actually going to be tonight, but there is something a little bit concerning about the way that CME did close here. But I'm getting ahead of myself a little bit too much. So let's talk about upside continuation first, actually. Sorry. Apologies on that. First and foremost, we also do see daily has confirmed many drives of bullish divergence coming in over here. Again, it will have a chance to create hidden bearish divergence if we do come back down and confirm a local high. That would be especially with a daily closure below 39,100, but even with a full hour, probably front runnable. Until then, divergence target for the first one has already been hit. The second one would be between about 41 and 41,500 or so. On top of that, if we go over here and reference stochastic momentum, you will notice on the daily and other medium to higher term timeframes, we are pointed up. The daily is going to be pivoted up as long as Bitcoin is above 37,600. The 2-day is freshly crossing up above 37,750. And the 12-hour is also going to be nice and vertical here above about 38,300. So again, I do lean towards likely another try to the upside. The question is, where did the next lower high kind of come in as far as I'm concerned? And again, I'd be very happy to see Bitcoin do the old flipperoonie and end up being bullish, but my criteria for that is $44,000. So I suppose now would be a good time to get into why I'm looking at that region. Oh, by the way, the daily jewel actually did get that low. Yeah. Very interesting right there. Actually pretty damn good signal, if I do say so, especially if the DMI flips around to support. Anyways, the reason why I do believe that there's still massive risk to the downside, not just because of the secondary chart right here, but specifically for that $44,000 or so region, is this chart right here. Let me just go back on over this. I've gone over this a million goddamn times, but the 5-day volatility versus momentum chart, anytime that we have seen volatility on the 5-day represented by BBWP get into the not single digits, but like teens or lower digit percentiles, the expansion phase from those extreme lows has led to about a 45% move over the course of the next a little bit over 40 days on average. Of course, this comes both to the upside and the downside as volatility is direction neutral, but the 5-day stochastic momentum has been incredibly accurate in getting the overall direction for this, even if we just backtest for the past couple of years. So it's actually been 100% perfect, to be fair. In this case, for right now, it should be known that that 5-day stochastic momentum is still downside angled. For spot price action, that will actually flip back up above 44,250, and for CME, which just closed last night. So this is a brand new tick right here. It is actually getting its first major drive down actually from basically November, which is kind of concerning. And more importantly, and also why I do really entertain the likelihood, or the potential, I should say, of a trap setup here, is that the number to cross it back onto the upside has moved up from that closure to today, the new open, from about 44,000 to now 46,000. So whenever you see that, when momentum is needed, or a higher close is needed, close over close, typically that implies that there is heavy downside pressure, in this case would be heavy downside pressure. The one sort of I guess consolation prize would be this, in the sense that because of the way that Bitcoin is right now, we haven't necessarily seen volatility expansion just yet, right? All right, let me just go to this chart. There we go. We haven't seen it just yet. I think that it's going to be possible again today, but again, I want to see both a positive slope on the BBWP and the moving average. For right now, obviously we don't have it on the BBWP, and the moving average is, for all intents and purposes, flat. So I do think it's obviously coming. It's required a metric shit ton of patience, but the longer that Bitcoin has essentially kind of goes sideways within this region, the more and more that this will naturally reset. It's probably going to take a month if it's going to happen at all. And if that were to happen, then, over some period of time, that's going to naturally flip back up. And if the volatility is still, relatively low like this, that's going to be my long-term bullish signal for targets up, technically speaking, to I mean, or historically speaking, probably around 60,000 bucks to the downside. You know, if we do kind of measure it from here, probably looking at $24,000 to $25,000, which is again directly in line with this target over here. So I do expect that we're going to see a bit of fuckery in between here, but for the short term, I do think that hopium is relevant to have for upside continuation. Essentially, it's more likely as long as Bitcoin's above 39,150. Below there, I do confirm, you know, a pretty nasty trap. There's going to be bounces along the way, obviously, but I'd be looking for, you know, moves back down to the bottom end of this blue box, which is 37 to low, 37 and a half to low 37. You know, probably another short-term bounce there. And then if it fails, I would be looking for the next major markdown between about 33 to 34 and a half. So yeah, I think that's going to do it for today's video. Nice and simple. Did I mention the funny rates? Yeah, I believe I did mention the funny rates. So good on that. Also forgot to shill the old Instagram. Yep, Instagram. Please be aware that if you're communicating with any Instagram account that is not the ones in the link in the description below, it is not me. I don't have any secret trade fund where I trade people's money. You are talking with a scammer, and it's probably not going to end up too well. Also, speaking about ending up not too well, Bybit, if you want to get like wrecked leverage trading, I do have a link, an affiliate link, of course, for full disclosure in the description below. They give you like $3,000 to $4,000 deposit bonus, but understand, you know, unless you already have a working strategy, which by the way, you can test out for free on anything, you know, a paper account for fuck's sake, but even on the trade journal feature for the Krown chain application, if you haven't already tested that out and you don't have good statistics that do support your thesis as far as trading goes, probably not going to end too well, and I cannot in good faith promote that. But if you already have that done, then well, that is something to perhaps consider as well. Anyways, forgot to also request a like and dirt, but man, don't even bother liking the video today. Anyways, I'll be signing off with that. I want to wish you well, take care, and until next time.